The market's in 3 minutes. Where should we start? Do we start payrolls or gilts? Payrolls or gilts? I think we'll go with payrolls. Also exciting this morning. So the payroll story is going to be very difficult to read later on today, isn't it? Because of all of the sort of one-offs.
Yeah, absolutely. I think that the strike action that we saw for Boeing workers, plus the hurricanes, Helene and Milton, are going to make it very, very unclear. We've got a huge dispersion of estimates in terms of exactly what people see. I think the mid is really 100,000. That would be, I think, the lowest in 4 years. But yes, it's going to be a question of how much the market kind of looks through that, given that jobs have been such an important part of how the market, at least, has been viewing kind of the Fed and whether they are going to cut again in November this month, and whether they are going to cut again in December. We've really seen a massive recalibration in October. We've seen a lot of bets taken out of the market. We're now seeing about 4 or 5 cuts through the end of next year. And I think the big question for markets, from this report and then heading into next week, where of course we see the Federal Reserve meet, is are we now in the right spot? Given what we're likely to see in the labour market, if we manage to look through this noise, do market bets accurately represent what the Federal Reserve is likely to have to do over the next year or so?
Anna was looking forward to the payrolls report. I'm going to look backwards for a moment. Why did we not see a bigger reaction to the PCE data?
Yeah, I mean, inflation has been less of a focus for investors, given that jobs has been so important. But I think it's really that a lot of those figures kind of were very much in line with what people were anticipating. We saw ever so slight stickiness on the kind of core year-on-year space, but really they were very much in line. So there wasn't anything particularly new for people to trade on. I think the data today is going to give people something new to trade on. It's just a question of to what degree people feel that they can take a strong bet at all, given that we obviously have the election before we even get to the Federal Reserve next week.
Let me ask you about gilts then, Rachel, because this has been a real preoccupation of the week. We've seen those gilt yields on the rise, not taking the pounds with them, perhaps crucially. We spoke to Pooja Kumar of TD just a moment ago. She was saying this is all Bank of England related for now. It's more at the short end than further along, but it can spread along the curve. And that's what worries her a little bit. And there's also US election risk. If we get higher yields on treasuries, what that does to gilts.
100%. I think this is all about coming to be all about momentum and confidence overall. Because as you point out, we've very much seen this move being concentrated at the short end. It's been the 2-year that's really being repricing. And that's a reflection of kind of some of those higher inflation forecasts, meaning that the Bank of England likely won't be able to cut as fast as people had been anticipating. So that's why we've seen the recalibration. But the problem comes if that starts to spread further out in the curve, and we do have supply risk as well from all of those debt plans to fund the budget.